We will talk today about mortgages and provide a beginner's guide to home loans. Getting a mortgage can feel like trying to read a different language. APR, LTV, amortization. It is overwhelming, and it is the biggest financial decision most of us will ever make. But what if it did not have to be so scary? So, in this video, we are breaking down everything you need to know about mortgages. From the different types of loans to the step-by-step process of getting one, and the common mistakes to avoid. By the end, you will feel confident and prepared. First, let us talk about mortgage basics and what you are signing up for. At its simplest, a mortgage is a loan specifically for buying property. The property itself is the collateral for the loan. Let us demystify the key terms you will hear. Principal is the amount of money you borrow. Interest is the cost of borrowing that money, expressed as a percentage rate. Term is the length of your mortgage agreement. For example, 30 years. Amortization is the total timeline to pay off the entire loan. The term is a segment of the amortization period. LTV, or loan to value, is the loan amount compared to the home's value. An LTV over 80% usually requires mortgage insurance. Understanding these 5 terms is your foundation. Now let us talk about the main types of mortgages. Fixed and variable rate, the biggest choice. This is the most fundamental choice you will make. Let us break down the pros and cons. A fixed-rate mortgage means your interest rate is locked in for the entire term. Your payment is predictable and never changes. This is the choice for stability and peace of mind, especially if you think interest rates might rise. A variable rate mortgage means your interest rate can fluctuate with the market. Your payment might stay the same, but the portion going toward interest versus principal can change. It often starts lower than a fixed rate and can save you money if rates stay stable or fall, but you carry the risk of rates increasing. There is no right answer. It depends entirely on your risk tolerance and financial forecast. Let us talk now about the step-by-step mortgage process. Getting a mortgage is not one event, it is a process. Here is how it works, from start to finish. Step 1. Get pre-approved. This is not pre-qualification. A pre-approval means a lender has checked your credit and finances and tells you exactly how much they are willing to lend you. It shows sellers you are serious and sets your budget. Step 2. Find your home and make an offer. Now for the fun part. Work with a real estate agent to find a home within your pre-approved budget. Step 3. Formal application and processing. Once your offer is accepted, you will complete the full application. The lender will order an appraisal to ensure the home is worth the price. Step 4. Underwriting. This is a deep dive. An underwriter will verify all your information and give the final yes or no. Step 5. Closing. You will sign a mountain of paperwork, pay your closing costs and down payment, and get the keys to your new home. Here are tips and common mistakes to avoid. Now for the insider advice. Here are the biggest mistakes we see people make and how you can avoid them. Tip 1. Do not just go with your bank. Shop around. Compare rates from big banks, credit unions, and online lenders. A difference of even 0.25% can save you thousands. Tip 2. Do not make big financial changes before or during the process. Do not buy a car, open new credit cards, or make large purchases. It can affect your credit score and debt-to-income ratio and derail your approval. Tip 3. Budget for more than just the mortgage payment. You must factor in property taxes, homeowner's insurance, PMI, if applicable, and maintenance. Budget 1% of your home's value per year for upkeep. Even an extra $50 or $100 a month toward your principal can shave years off your loan and save you a fortune in interest. Mortgage is a powerful tool that makes homeownership possible. It is complex, but it does not have to be terrifying. By understanding the basics, knowing your options, and avoiding common pitfalls, you can approach this decision with confidence. Now, we want to hear from you. What is your biggest question about mortgages? Drop it in the comments below. We read every single one. Thank you.